In this talk, I will discuss what qualifies for travel costs. For travel expenses to be deductible, the trip must qualify as traveling away from your tax home overnight to perform work. Your tax home is your main place of business, regardless of where your personal home is located. If you have multiple locations where you regularly work, the main location you work at is your tax home. If your main place of business is your personal residence, or you do not have a regular place where you work because of the nature of your industry, then your personal residence is your tax home. Alternatively, if you have no regular work locations and you have no home residence, then you are considered a transient and your tax home is wherever you work. So for transients, they cannot deduct any travel expenses. For travel costs within your tax home, refer to the vehicle expense talk. Qualified travel expenses include airfare or other transportation costs, hotel and accommodations, dry cleaning or laundry services, business calls, internet, computer fees, tips. The IRS also allows for what's called the Simplified Method for incidental costs. So instead of keeping detailed records for things like tips for baggage carriers, maids, stewards, you can use the simplified method and simply deduct $5 per day. Note, if you use this method, you cannot use the standard meal allowance method, which we'll talk about shortly. Travel expenses can be deducted for yourself and your employees or contractors, but there must be a real business purpose for the person to be involved with the trip. You cannot deduct travel expenses if your work away from your tax home is for more than 1 year, or for any of the other reasons listed on the screen. Additional rules apply to travel based on whether the trip is within the U.S. or outside of the U.S., and for business or personal reasons. When determining what days of your trip count as business days and what count as personal days, include as business days any day you worked on your trade or business during your regular working hours. You can also include any day your presence was required for work, such as for a meeting, even if you didn't work all day. You can also include as business days any days you were prevented from working due to circumstances beyond your control, and also standby days, such as weekends and holidays that come between the days where you are working. Transportation days to the business location also qualify as business days. However, if you did not take a direct route when traveling to the business location, only count the days that it would have taken had you taken a direct route. When travel consists of both inside the U.S. and outside of the U.S., apply both of the rules to the applicable costs. Days when traveling to leave and return to the U.S. are both considered days traveled outside of the U.S. To determine the amount of costs that are deductible, the following situations apply. If your trip was inside the U.S. and completely or primarily for business, which means more than 50% of the days was for business, travel expenses to the business location are completely deductible, even though you had some personal use days. Now, if your trip was inside the U.S. and primarily for personal reasons, travel expenses to the business location are not deductible. Direct business expenses while at the business location, however, are deductible. If your trip was outside of the U.S. and completely for business, travel expenses to the business location are completely deductible. However, if your trip was outside of the U.S. and primarily for business, which means more than 50% of your days were business days, you must allocate the costs of traveling to the business location using travel allocation rules. So the business deductible amount is equal to the allocation percentage times travel to location costs, like airfare, driving, bus, train, etc. So the allocation percentage is equal to the number of business days divided by the total days of the trip. If travel to the location costs include costs related to personal days, then use what the costs would have been without the personal costs. For example, if an airfare ticket is purchased for multiple locations, use what a plane ticket would have cost to the original business location only when you purchase the original ticket. If your trip was outside of the US and primarily for pleasure, which means less than 50% of your trip was business days, travel expenses to the business location are not deductible at all. Direct qualified business expenses while at the business location, of course, are still qualified. For conventions held outside of North America, there are additional requirements that the meeting be directly related to your trade or business and that it is reasonable to hold the convention outside of North America. To determine reasonableness, consider the purpose of the convention, the sponsoring organizations and their purposes, as well as other relevant factors. Also, be aware that cruise ship-related travel activities for business have additional rules and limitations.